Silicon Valley Bank, what happened? On March 10, 2023, Silicon Valley Bank, SVB, failed after a bank run, marking the second-largest bank failure in United States history and the largest since the 2008 financial crisis. The collapse of SVB has had a significant impact on startups from the U.S. and abroad, with many unable to withdraw money from the bank for a limited period of time. Other large technology companies, media companies, and wineries were also impacted. During the COVID-19 pandemic, the tech sector experienced a period of growth. Capitalizing on an increase in deposits in 2021, SVB purchased long-term treasury bonds. The market value of these bonds decreased through 2022 and into 2023 as the Federal Reserve raised interest rates to curb an inflation surge. Higher interest rates also raised borrowing costs throughout the economy, and some Silicon Valley Bank clients started pulling money out to meet their liquidity needs. To raise cash to pay withdrawals by its depositors, SVB announced on March 8 that it had sold over $21 billion worth of securities, borrowed $15 billion, and would hold an emergency sale of some of its treasury stock to raise $2.25 billion, including $500 million to General Atlantic. The announcement, coupled with warnings from prominent Silicon Valley investors, caused a bank run as customers withdrew funds totaling $42 billion by the following day. On the morning of March 10, 2023, the California Department of Financial Protection and Innovation seized SVB and placed it under the receivership of the Federal Deposit Insurance Corporation, FDIC. About 89% of the bank's $172 billion in deposit liabilities exceeded the maximum insured by the FDIC. 2 days after the failure, the FDIC received exceptional authority from the Treasury and announced jointly with other agencies that all depositors would have full access to their funds the next morning. Seeking to auction off all or parts of the bank, 11. The FDIC reopened it on March 13 as a newly organized bridge bank, Silicon Valley Bridge Bank, N.A., superseding an earlier plan to satisfy depositors through a deposit insurance national bank and receivership dividends. Thanks for watching. For more such informative videos, do subscribe this channel.